When an economy crashes, headlines scream about trillions lost, jobs vanishing, and families losing their savings. For most people, it's a time of fear and survival. It can feel like the world is ending. Your portfolio is bleeding red. The news is a cycle of panic, and your instinct is to sell everything and hide your cash under the mattress. But for a small group, a crash isn't a crisis. It's a once-in-a-decade opportunity. While everyone else panics, the wealthy follow a specific playbook to buy assets for a fraction of their worth. This isn't magic or conspiracy, it's just strategy. Hi everyone, I'm George Economy PhD economist, and in this video I'm going to walk you through the exact playbook. You will learn step by step the rules the rich use to grow their wealth when economies seem to be falling apart. And also, don't forget to subscribe to my channel. You will help ideas and analysis like this find more curious minds like you. First, you have to understand the single most important concept of a market crash. Wealth doesn't just disappear, it transfers. Imagine a high-stakes poker game. When a player loses, their chips don't vanish from the table. They get pushed to the player who had a stronger hand, a better strategy, and the nerve to stay in the game. An economic crash is the world's biggest poker game. The average person is often forced to fold. They lose their jobs and have to sell stocks to pay the mortgage. Or they see their portfolio drop 30% and sell out of fear. They are forced to sell their assets at the worst possible time and price. But the wealthy, they are sitting at the table with a mountain of chips waiting for this moment. During the first months of the COVID-19 crash, while millions lost their jobs, American billionaires saw their collective wealth increase by over $400 billion. After the 2008 crisis, investors like Warren Buffett made billions buying solid companies when their stock prices were at rock bottom. They weren't lucky. They were prepared. They had a playbook, and its first rule is the most important. You have probably heard the saying, cash is king. Most of the time, that's wrong. When the economy is booming, inflation makes cash trash. It loses purchasing power daily, but there is one time when cash is the true king, during a market crash. The wealthy understand this. As the market overheats and greed blinds everyone else, the smart money starts quietly taking profits. They aren't 100% invested at the top. They are trimming positions, building a war chest of cash, and patiently waiting for the inevitable downturn. Having cash on the sidelines during a crash is a superpower. It lets you be the buyer when everyone else is a forced seller. It allows you to shop for discounted assets when there is a Black Friday sale on the stock market. While others get margin called and their positions liquidated, you are the one with the capital to pick up those same assets for a fraction of their price. This isn't about perfectly timing the market. Nobody can. It's about having the discipline to prepare. It means building an emergency fund, reducing high interest debt, and having liquid capital ready when opportunity strikes. Without cash, you can see the opportunity of a lifetime, but you will be stuck on the sidelines. The next rule is one of the most powerful, and it happens right out in the open. The wealthy don't fight the Fed, they follow it. Think about it. When an economy is in a freefall, what do central banks like the Federal Reserve always do? They intervene. They slash interest rates to near zero and pump trillions into the financial system through quantitative easing, qualitative easing, or just simple normal strategy. In simple terms, they print money. The goal is to stabilize the economy, but where does that money go? It doesn't land in the average person's bank account. It floods the financial system, and a huge portion flows directly into financial assets. It pushes up prices of stocks, bonds, and real estate. The wealthy know this is a guaranteed part of the playbook. They know a crisis will be met with a massive cash injection from the central bank. So when the crash happens, they don't just see falling prices. They see the starting gun for the next asset boom, fueled by the central banks. They position themselves to ride the wave of the new money. While the public focuses on scary headlines, the wealthy focus on the flow of capital, knowing that the government's response will ultimately benefit asset owners. By the way, if this is helping you see the market in a new light, hit that like button. It tells the YouTube algorithm this is valuable information and helps get this playbook out to more people. Now, back in the analysis. Investor Sir John Templeton said the time to buy is at the point of maximum pessimism. Baron Rothschild put it more bluntly: buy when there's blood in the streets, even if the blood is your own. This is the hardest rule because it goes against every human instinct. When markets are crashing, your brain screams, sell, sell, sell. The news is terrifying. It feels like the world is ending. This is the moment of maximum fear and also the moment of maximum opportunity. Wealthy investors aren't buying a stock just because it's down 10%. They are waiting for capitulation, the moment the average investor gives up hope and sells everything, just to make the pain stop. This is the blood in the streets. And this is where vulture investors thrive. They search for fundamentally sound companies, quality real assets, or distressed debt that was unfairly punished by market panic. They aren't buying random cheap stocks. They are buying high quality assets at bargain prices. They know a great company is still a great company, even if its stock price is temporarily cut in half. After the 2008 crisis, for example, private equity firms specializing in distressed assets saw a massive 28% increase in fundraising. Their mindset is different. They don't see a crisis, they see a sale. The final rule tying this strategy together is patience. Getting rich from a crash isn't a get-rich-quick scheme. The wealthy don't try to buy at the absolute bottom and sell at the absolute top a few months later. They understand that market recoveries take time. Their greatest advantage is a long-term perspective. They can afford to buy an asset and wait 3, 5, or even 10 years for its true value to be realized. Historically, for major indices like the S&P 500, every market crash has been followed by a recovery to a new all-time high. The people who lose money are the ones who sell during the downturn. The people who build fortunes are the ones who buy during the downturn and have the patience to hold. In the spring of 2020 panic, the S&P 500 fell over 30%. Many people sold in fear and locked in devastating losses, but those who held on or bought more saw their portfolios not just recover, but surge to new heights. By the end of 2020, the market was up over 65% from its lowest point. This long-term view allows them to ignore short-term noise. They don't get shaken out by scary headlines or a few bad days. They have a plan. They stick to it and they let time do the heavy lifting. So, long story short, that's the playbook. Rule number 1, build up cash before the storm so you can be the buyer when everyone else is forced to sell. Rule number 2, follow the central banks because their response will inflate asset prices. Rule number 3, buy when is blood in the streets, at the point of maximum pessimism. And rule number 4, play the long game, holding quality assets with the patience to wait for the recovery. The key takeaway is this: economic crashes are not an apocalypse where wealth is destroyed. They are a massive, brutal transfer of wealth from the impatient to the patient, from the unprepared to the prepared. This cycle has repeated itself for decades, and it will continue to do so. But now you know the playbook, you know the strategy. The goal isn't to be angry at the system, but to understand the system, to understand how it works, so you can be on the right side of the wealth transfer in the next downturn. If you want to keep learning to build and protect your wealth, subscribe and hit the notification bell so you don't miss the next video. I highly recommend you to combine the financial knowledge with the economic one. You will see many videos in my channel. Thank you all for watching, and I will see you in the next one. Bye bye.